It's Thursday, the 3rd of June 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Australia's growth rate beats forecasts and the economy is now bigger than before the pandemic. That's our main story. Also coming up in today's podcast, Melbourne's lockdown extended for another week after the state records another 6 community-transmitted cases. The chair of Tesla says Australian commodities can be part of the electric vehicle boom if the government plays its part. And guess where the top 10 house price rises come from? Immediately after the podcast, stay listening for an interview with EY Chief Economist Joe Masters about yesterday's economic growth figures. But first, here's a brief look at markets. Wall Street was mixed overnight. In early afternoon trading, the S&P 500 and Dow Jones Industrial Average were both up 0.1%, and the tech-heavy Nasdaq was off 0.2%. European markets were generally stronger, with London's FTSE closing 0.4% higher, and the Stoxx Europe 600 up 0.2%. The S&P ASX 200 hit a record high yesterday following the release of better-than-forecast GDP figures. Energy companies led the way, with Santos, Woodside and Origin all climbing more than 4%. Higher iron ore prices helped the big miners. BHP finished more than 3% higher, while Fortescue Metals and Rio Tinto ended the day up 2%. Oil prices are up again, extending their recent run and are trading at their highest level since October 2018. OPEC provided an upbeat assessment for demand, while talks between the US and Iran over a nuclear accord appear to have stalled. If a deal is reached, that would allow Iran to put more supply into the market. Oil prices are up about 40% so far this year. Gold is trading around $1,907 an ounce. The Aussie dollar is trading at 77.5 US cents. And thermal coal prices have hit a decade high after a number of mine disruptions globally. Prices for thermal coal from New South Wales, mostly to be used in power stations, have more than doubled over the past 12 months, helped by demand from China, India and Vietnam. The Australian economy is now larger than it was before the pandemic, after official March quarter growth figures showed a 1.8% expansion during the 3 months. Private sector investment drove the growth, which was better than most economists had forecast. It was the third successive quarter of strong growth, following the pandemic-induced recession at the beginning of last year. The Bureau of Statistics figures triggered a jump in the S&P ASX 200 and a spike in the Aussie dollar. Federal Treasurer Josh Frydenberg was quick off the mark, tweeting that Australia's economy was now bigger than it was pre-pandemic, something no other major advanced economy had yet achieved. Australia is almost 1% bigger than before the pandemic. The US is next best and is about 1% smaller than it was. The economy expanded at its fastest clip in 50 years over the last 3 quarters, which isn't totally surprising given it went into its worst downturn in a century at the beginning of 2020. The outlook depends very much on the rollout of the COVID vaccinations and then on the reopening of international borders to students, immigrants and travellers. Across the board, the numbers were good. Businesses and households were spending more, even though during the quarter the federal government pulled back on some subsidies. Sectors to benefit most included hotels and eating out, transport services and recreation and culture. Spending on food dropped relative to a year ago. As I discussed with EY Chief Economist Joe Masters immediately after this podcast, the Australian economy is in good shape. Not quite rude health, the labour market still has some way to go, but not far off it. The housing market is buoyant. Global economies are also accelerating as the vaccination rollout continues around the world. And monetary and fiscal policy here and overseas is ultra easy. If you have a job, it may well be the best of times right now. In a moment, the rest of the news you need to know this morning. In overseas news, global meat supplier JBS, which owns slaughterhouses in Australia, could be shut down for a prolonged period as a result of a cyber hack. It's helped push up already high beef prices, particularly in China, the world's biggest buyer of beef. Russian criminals have been blamed for the ransomware attack, and it brings to the fore the issue of food security for individual nations. A global agreement on requiring all listed companies to disclose the risks they face from climate change in a standardised way is close, according to the governor of France's central bank. The Financial Times reported that the agreement could be ready by November for the United Nations COP26 climate change conference. The rules would capture all of Australia's listed stocks. It's a big deal. In an amazing story from Wall Street overnight, AMC is a listed company and is a massive cinema chain. Its stock was briefly halted overnight after the company's share price jumped 93% following promises of free popcorn and special screenings to investors. It sounds ridiculous, but it's part of the meme trading frenzy going on at the moment, driven by the huge number of retail investors that have entered the market since the beginning of COVID-19. Retail traders now own 80% of AMC's stock, with 3.2 million new individual investors buying into the group on the back of popular messaging boards such as Reddit. Other meme stocks such as Bed Bath & Beyond and BlackBerry also did well overnight. And staying in the only in America category of stories, Anheuser-Busch, maker of Budweiser, has promised free beers for every adult American if the US can meet President Joe Biden's target of 70% vaccination by July 4. Apparently, it would be the biggest beer giveaway in history. Okay, it's a marketing stunt, but it's certainly got me. Locally, the lockdown in Melbourne has been extended for another week after the state recorded 6 new community-transmitted COVID-19 cases yesterday, one of which was an aged care resident. But the lockdown in regional Victoria will end tonight. People will not be able to travel between the city and regional Victoria, and QR code entry will be extended to supermarkets and large retail outlets across the state. Acting Premier James Merlino announced more than $200 million in support yesterday, including grants of up to $5,000 for general businesses, and emphasised that the best way to handle the coronavirus was to get vaccinated. Thus far, Canberra has not responded to calls for more financial assistance for Victoria. New South Wales has also been caught up in the most recent outbreak, with 250 people isolating at home after being deemed close contacts of a Melbourne man who visited the south coast of the state, Gundagai and Goulburn, last month, when he may have been infectious. Meanwhile, the Prime Minister Scott Morrison was back in the country following his trip to New Zealand. He defended the vaccination rollout, saying the number of jabs had doubled in the past month. The record day recorded 130,000 jabs, and in total there have been 4.5 million doses administered. The chair of Tesla, Australian Robin Denholm, yesterday said the electric vehicle maker would soon consume more than $1 billion worth of local lithium, nickel, and other critical and rare earth minerals annually for its electric motors and batteries. But she warned that Australian governments, miners and manufacturers needed to speed up innovation to shift the country from an exporter of fossil fuels into a new energy superpower. Ms Denholm said Australia needed to shift from exporting climate change to exporting climate solutions, and it does have the minerals to do so. Woolworths has launched its own standalone payments business known as WPay. It will offer payment processing capabilities to other businesses and take on the big banks. It's part of Woolworths boss Brad Banducci's strategy of diversification, generating alternate income streams. It's done that in logistics through its purchase of Primary Connect, in data analytics by upping its stake in Quantium, and in media through its subsidiary Cartology. Woolworths is already the 5th biggest processor of card payments in Australia, behind the big 4 banks. The Prime Minister Scott Morrison will head to the Group of 7 meeting in England next week. He's hoping for a free trade deal with Britain and a reinvigoration of a troubled submarine contract with France, according to media reports. The $90 billion submarine deal with French company Naval has been strained over cost blowouts and the involvement of Australian companies. The UK-Australia free trade deal is close to completion, but sticking points around agriculture will remain. Mr Morrison will also visit Singapore. The Australian Prudential Regulation Authority boss Wayne Byers told Senate estimates yesterday that the pressure on the superannuation industry to lift its game was working. He said an example of the success was the reduction in funds from 279 8 years ago to 170 today. Mr Byers said fees and costs were declining and $400 million in members' money had been saved in the past 18 months because of APRA's actions. I mentioned yesterday morning that house prices surged last month to record levels. CoreLogic has come out with the list of best and worst performing suburbs over the past 3 months. The good news for Sydney homeowners was that the top 10 were all in that city, mostly on the North Shore. The bottom 10 all came from Western Australia. Staying in the property market, vacancy rates of apartments in central business districts have fallen to pre-pandemic levels in some cities, in good news for landlords who have been hit hard by the lack of international students. But the reason in some cases has been landlords selling up to cut their losses. Vacancy rates in Sydney CBD fell to under 3% last month, half the level of its peak last year, according to online property group Domain. Melbourne vacancy rates were 8.6%. Victoria's Royal Commission into Crown Resorts continues, and yesterday it emerged that the gaming group breached its own code aimed at curbing problem gamblers as recently as April. The inquiry was also told a problem gambler played for more than 34 hours in 2019 before being forced to take a break. The Commission is considering whether Crown is suitable to hold its Melbourne casino licence. Rabobank has forecast that the national winter crop will be almost 23 million hectares, up 2% on a year ago. That's close to the record planting of 2016-17. The summer and winter crops combined will reap about $15 billion for farmers, despite the mouse plague in New South Wales. That's a lot of wheat. Infant milk maker Bub's share price surged on Tuesday, up 17%, triggering a question from the ASX about why it jumped so fast. Its response yesterday was that it had read the news reports about China changing its family policy from 2 to 3 children, and that would be good for the group because it sells products into China. New week, new offer for citrus grower Vital Harvest. A Macquarie-affiliated fund upped its offer, overbidding Rock, a private equity group. It's the 17th offer for the group, but no one's betting it's the last. And finally, Rhino Rack, the business that sells and fits roof racks and bike carriers to vehicles, among other things, has been sold to a US company, providing founder Richard Cropley with a $255 million payday. Mr. Cropley started the business in 1992 and runs it out of Western Sydney, employing 250 people. Good on him. Don't go anywhere, because up next is the Fear and Greed Daily Interview. Today I'm talking to Joe Masters, Chief Economist at EY, and there's plenty to talk about as we unpack yesterday's GDP data, what it means for business investment, household savings, trade and more. We also look at the economic impact of the Victorian lockdown and whether businesses are getting better and faster at bouncing back, largely because they've now done it so many times. That's Joe Masters from EY up next in the Fear and Greed playlist. It's Thursday, the 3rd of June 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.